Welcome to TradingLounge and the indices, and starting with the SP500 here. So I'm on 20,000 ticks here, so we're just at the 5,000. So we're looking at 1, 2, 3, 4, 5 up here, and we're looking for an A, B, and C correction here, and we're looking to purchase at this particular point in time. And hopefully we should see this actually just kind of cruise through this level here. We'll still see another sort of little version of this here before pushing up, so we can look at this, copy this here, and look at this as wave 1 and 2. I mean, as I mentioned yesterday, we will probably be looking, to work this ABC correction here, and also in with a bullish weekly cycle to purchase. So that means that late Thursday afternoon this should start shoring up, and Friday and Monday should be bullish. Actually, what I'll do here is just to look inside this little pattern here. I'm just going to remove this and move into here. So this, excuse the mess, just let me sort of put Humpty Dumpty together here. So that's okay at this point. Let me just get this sorted out a bit better here. I'll just give us a little bit more definition of. So it's pretty clear to me that we've got a little impulse wave down here as 5 waves, and then the wave 2 here, then 1, 2, 3, 4, 5, and then yesterday we counted 5 waves down, and we were looking for a turn and a push up. So we're getting our ABC pattern here to the upside, and of course we can use our Fibonacci tool, but that will bring us in at the pocket, the 62 to 65. But we always gravitate to the closest largest number, and also supply levels from over yonder here. And yeah, so we should see this push up here further. Look, it could push up to the 78.6. okay, and also want to talk about if I'm wrong as well. So once we get that top in there, we should see some sort of quick wave 3 normally comes down to the previous low here, give or take. It's just as a sort of a guide stick. And if we take it down to the closest largest number, we should be down here somewhere. And based on that, if this is the case, and then you see the bounce, and if you can figure out those 5 waves in that, well, that would be great, because this will be where your setup is now. I've probably done this a little bit too big here. You see how this one here, this little top here, it could be just something like that. But having that first impulse wave there enables you to put your stop under here, and you may get more of a pullback in here. Sometimes it pulls back 80%, it does all sorts of things. So you just got to you start from the top. So if we're looking, as an impulse wave, you start from the top, and then you can go to the second high, which is the B wave, and A, B, and C. So the entries at the B wave, and if you can get the next 5 waves up, then you can look for, the classic trading levels pattern across a particular level here, and this smaller version here will have this bigger pattern tucked in here. So it'll be the arrival, the reaction, first high above the level, and ABC. So you can refine it this much further. And because we're at the 4.9 here, if I can just give that a bit more gravity there, that number. And the other thing you can look for, because you want to start to building in the beginning of the trend, and from the 4.9 here, you'll have 1, 2, and 3. Now, if the number 3 here, the 30, becomes the tested support here with the classic trading levels pattern, or you can see that the number 30 just is support, well, that's where you need to build in. And the next level is 50. So the Fibonacci numbers 1, 2, 3, 5, and 8 here. And of course, we'd also use group 2 here as well. So 965, don't worry about the 50, and 972 in here, roughly speaking. So all of that's group 2. So once the market gets in here, then once it gets support in there, and as you can see over here, this is quite typical of it playing out here, getting support here, or you can see how it sits in here. So as soon as you can eyeball it enough to give it, give it support, then you start building in again at that point. So the idea is to build in. Now there will be another 5 waves coming into play here, so the third wave should be strong, and then this should play out. This will play out here, and then there'll be wave 5 here, and this will also give you an ABC pattern here, and this is where we need to build in again. And like here, if 1, 2, 3 here, this is where we need to build in over here. 10, 20 and 30 over here, we need to build in again over here. So there's lots of places to build in, and you just need to know your levels, and then 50 here, and then 80 again, another group 2 there, so, and work through there. Okay, so that's my 2 bobs worth. Right now, I think that if I'm going to make a mistake, and it wouldn't be the first time, but you need to know when you're wrong and what you're going to do about it. So once this completes up here, right, it's going to lead, it'll come up into this supply zone up here, so probably 5,020 or something like that. So if that's going to be, you can see here that in one way or another, this must be wave 1 here. You see how we've got this low here? So this is an expanded flat here. So if we were counting 5 waves up here, we would be looking at this as 1 and 2 over here. That would be the first logical step. And then the third wave over here, if we can just put that in here, because now we're talking about being wrong and what we're going to be doing about that. So let's just put that in here. And yeah, so I mean, there are some stocks like NVDA that can make a new high, and NFLX and a few. So then in this little move here, we could also, if we drop it down another level here, this would be wave 1 here, little wave 2 in here. So we'd be looking for 5 waves within the third wave, and I don't think that's finished just there yet, but I'm not going to waste your time and do that. So 4, 5 here. So what I'm doing here is just sort of mapping out a little pathway for this, so you can kind of get a rough understanding if I'm wrong. So we can go 1, 2, 3, 4. I can see the 5 waves in here. I can see that this is not finished yet, and there'll be probably 2 more tops in here. So it'll come up here, and then you're going to see this wave 4 here. This wave 4 should be bigger than this little guy here, and then there'll be the wave 5 up here, and then there'll be this wave 4 here. So this is going to be a bit tricky here. Time is your friend here, and then this wave 5 here should be roughly the same length as this. And that will give you a bit of an idea that that would be the top, because even like if I'm wrong, this 5 waves up here will come back and give you this situation here, and then push up again at that point. This is where I could be wrong, and then this would become, or this would be 1 and 2 here, and 1 and 2. So this would be, I don't think that I'm wrong, but you know, like I said, it wouldn't be the first time, and we're all wrong. So it's not a matter of pointing the stick. It's a matter of like having plan B. So this could be 1 and 2, and this could be 1 and 2 back to here. So once this pulls back here, if you can kind of figure out this move here, then if you can kind of figure out the rest of this little pattern to play out here, then you're going to, it doesn't really matter if you can or you can't to a point, because it's going to create a top, and this 5 waves up here is going to see some rebalancing. So if you're patient enough, you don't need to do much. You'll just see it pull back, but it will expose that top, and that top will be your entry point, because that's the point that we'd be wrong at this point. But don't jump the gun either, because if this comes down here, don't remember that we can get a wave 2 pulling back quite high here as this wave 2 before it comes down again. So be very clear. And in fact, look for a classic trading levels pattern on 20 or 30. So on top of 30 there, look for this pattern here, like the arrival, the reaction, the first high above the level, the ABC, and so on. It may not drop below the level here. That may not, that will be the variation of that pattern, but that would be one of those two. This is the most likely pattern. So if we get support on wave 3, what it does is it severs any pull from this particular point, this number here, in the short term anyway. These are sub levels, and then this will be minor level first minor level 1 here for this, so we'll just give that a little bit of gravity as well here for the time being. So yeah, so that's it in a nutshell, and this is playing through with a lot of stock as well, so this is where we've also got this count here, but it is confirming quite nicely in here. So we could take this and pretty much apply it to most markets. Okay, so this is the A, the B, and the C for wave 2, and then we've got to start building in down here and so on. So this should be late Thursday afternoon, Friday, and if, like I say, if I'm wrong, then well, the first thing you can do is basically this top here. You need to be long above that. That's one thing. Secondly, you can look at this second top, but only on the pullback down here. And if you're not sure about what you're doing, then don't do anything or trade less. You know, if you normally trade $10, well then trade $2, so to speak. Okay, so that's that at this point, and we can translate this mess through to the NASDAQ. So we've got this wave 1 up here, and this is 1 degree higher here. I won't go into that at the moment, but wave A here, and then an A and a B and a C wave for the B wave, and down for the C wave, and then we'll start building in here. So based on the bullish weekly cycle, we'll be looking to move in on late Thursday and Friday. We'll see how that goes in terms of time, but that's basically the pattern we're looking at. And we're at, as the S&P's at 5,000, this is at 18,000, and we call 8 a profit-taking number, and it's the third strongest number, 1, 5, and then 8. So it's doing its job, and it's reacting from this, but this will be our buying op here. If we take a closer look at this one here without boring you to death, this is it here. So this top here, I need to lift it up 1 degree of structure, but apart from that, that's okay. I'll put that there and that there just to... So once again, we've counted down as 1, 2, 3, 4, 5 here, and then the A, the B, and the C wave up here. And as I mentioned yesterday too, is that the A wave is normally sharp, you know, it's normally short covering and taking out stops, and then we look to try to see the C wave here on a bit more of an angle. So if you see it on a bit more of an angle than the A wave here, then you know that you're on the right track. If you see it stronger, then you know that we're probably wrong at that point. But anyway, this is where we're sort of heading to on this. So yeah, tomorrow we'll focus on, in tomorrow's video, we'll focus on this area down through here and building. And we'll be in there for the longer haul. In this case, and we need to get positions into this market and hold them there for a while. So navigating all these, be 1, 2, 3, 4, and 5 here, and we can have a deep pullback here, and then we can have 3, 4, 5 up here, and then we can also have a deep pullback here, and these sorts of things. So it's quite tricky to build into this, so we'll just need to tread lightly and use smaller positions, but we want to continue to build in at every opportunity and hold in there for the longer term. Now we come to the Russell here. So when we think about the Russell, we'll do the same thing. We'll go down for down for the A wave and ABC here for the B wave. It looks like it wants to go further up. This is where we start to look at, this is obviously a smaller market. We could probably look at this here as an A wave, a B wave, and a C wave here, and then continue higher at this point. But I can't call that because I don't have enough evidence for that. I still have to play the smaller markets, the Russell, the DAX, and all of those. I still have to play them with the C wave for the C of the B, and then the C wave, and then up at this point. Now, when we look at the TNA on this as well, this is also what I want to have a look at too for the S&P here. This is just the index here, so it's not the end of the session. It probably is the end of the session. We've had this move down as the A wave, and it came down on higher volume, and it's closed up higher. So we've got that also, some of that volume can be applied to that low being in place. But we've got this push up here today, but we're on lower volume than the previous bar. So that tells me that's divergence, and that tells me that this move up here is corrective. So that's the price, the volume confirming the price action. When we come over to the TNA here, yesterday we looked at this being an ABC for the B wave, and that's sort of playing out quite nicely here, and obviously, if this low here gets taken out, then it will confirm that. But this one here would be 3, 4, 5 here, something like this, and then would push up at that point. And of course, here we can just use the trading levels here for this, and there we go. So we're at 40 here. The buying opportunity down here, you could probably buy it at 30 here, close to it, but also use group 1 in here, 31, 32 and 33, and then look to add on 35. Obviously group 2 is going to give you a hard time, so don't act quickly, and then basically you want support back on the 40 there, so you'd be looking for a classic trading levels pattern there to build in on that. So that's kind of what we're looking at here in the bigger picture for this. So yeah, I'll just the other point, look, if I'm wrong and the market's going to continue up, then if I take this low here, right, and then look at this as wave 1 where that A wave is over here, and 2 here, and then let's just assume that this is a 3rd wave going up here and I get it all wrong, and then we have the 4th and the 5th. We can't go chasing it because it will come back, and we'll get it on the flip side, we'll get it over here based on those 5 waves. If I'm wrong, it'll just it is what it is, but we need to be patient and let the market sort of come to us as best we can. Okay, so that's that. We move over to the European markets, and this is a situation here where on the DAX where we could look at this as an A wave here, an A, B, C for the B wave here, as we've been working through in the 5 waves down here. So that could be finished here. We could just go up from this point. But what I'm a little bit concerned about is that this little move here is 1, 2, 3, 4, 5 here. So this is, we could look at this, well, it's the same story really. So I could look at this here as a little A wave here, and copy this for the B wave here, and a little C wave over here, and then the C wave over here, and then I've got to get this B wave over here. So this A wave comes down to here. So all of this is the A wave, the B wave, and the C wave here. And obviously this needs to move up here further into these highs here, and then come down here and then move up. Now, obviously based on this alone, where it's got here this as a nice A wave, a B wave, and a C wave here, well, one would think that we can go long from from here, and it's looking very nice indeed as a bullish thing. And we know that this this whole pattern here is corrective, but will it just double in size? That's the problem, So I think here, I don't think it's going to go in the next session, everything's going to go up, all right? So these have got to go up further. So this will be 1 and 2 here, and there'll be a 3rd, 4th, and 5th. So it will go higher into these highs here, but we don't need to chase it. It will create a high here. Once it creates its high, then we can just draw a line in the sand and we can go long above that. But we want to improve on that, and we also don't want to get stuck, because if this does go as wave C of B around these highs and then comes down here, then and it should, it is following the S&P in its own way. I know it's been a little bit different over here, but it struggled. It got to 17,000, a big number, before the others got to the 5,000 and the 18,000 and so on. So there is so anyway, I can just pull them all together. Now, once again, too, if we need to look at this here as more bullish to the upside here, as wave 1 here, and 2 here, and 3, 4, 5, then we'll have to get it on the flip side once again. Do you know what I mean? So from this low here, if we do get 5 waves up here, we'll just have to wait for it over here. And that could be quite possible. I'm seeing this in some stocks, like NVDA could push up higher. But yeah, so I'm not going to call the trade into this because it might just follow the S&P. It may not, but it could. Okay, so that's the DAX, and then we move over to the FTSE. So this has been our sort of main count here. It's a little bit flimsy, but I'm going to hold in there unless this low here is breached. If this low stays here, then I'll keep this count. And I know, you know, there's other Elliott people out there, they'll probably have a different count, and crikey, they could be right easily, you know. I can see that it can be counted in many ways. I could also just put the B wave over here and look at this as 1 and 2 here and 3, 4, 5. I know that's a little bit dodgy as well, but you know, there's different ways to view all of this. But the A, B, C, D, and E here is a triangles, okay. And look, it's not the greatest wave 1 up here. They can pick holes in this. I understand all of that. This is not a bad looking 5 waves up here. It's just that it's coming down deep here, but technically it can come down to the last point here. And this is all about the 75 here, the 5, not so much the 7, but the 5, the 500 here. And look, it's holding up pretty well. And we've got these, you know, higher lows here at this point. We know that with the US markets, and if this seems to be following the DAX, and the DAX follows the S&P, and the S&P follows the NASDAQ, and the NASDAQ are pulled around by you know, a handful of stocks. So, but in this case, you know, we should see a further upside and then down. So we could make a new low here before going up again. So it's going to be a little bit tricky in here. And all the other stocks, we've had those as 5 waves down. So we're going to have to look at that too. So we're splitting hairs on this one, but we're just going to hang in there until proven otherwise. Okay, so this is our wave 2 here. And 1, 2, 3, I don't know where my 3's gone, but we'll just get that, 3, 4, 5. And I'm going to look at all of this down here as just the A wave. We do have 5 waves up here, just like the other markets. We've pulled back for a B wave. It's probably completed, and we'll look up here for a C wave. This one can be the same length or probably smaller. The lower end of minor group 2 here, the 7650, so between probably 676 and this one here, somewhere in there. It will look to fade at that point, and we'll see if we get this C wave down here, just nipping into these lows down here. Once again, if this pushes up as wave 1 here, because I've got things horribly wrong, as 1 and 2, and it goes up here as 3, we still can't chase it. We'll still need 4 and 5 and then get it on the ABC coming back, you know. But yeah, because we've got 5 waves here, we're going to get another 5 waves over here. I would say if you were trading this up here, you could go long here, but it hasn't really pushed up much like the other one, so it's struggling at this point, and it's already over what's the name, but probably 76.20, 76.30 you could probably squeeze out of this. But anyway, this is the general pattern that we're looking for here. So I'm going to stay with this until proven otherwise. Then we come to the to the Aussie market, and with the Aussie market, you know that I'm looking at it in 2 ways. We've got this wave 1 and 2 here, and then 1 and 2 here. So this 1 and 2 in blue here brings us 1, 2, 3, 4, 5 up here for this 3rd wave, and we can look at this as a 4th wave. The 38.2% is here. Like the DAX, in a way, we could look at this as an A, B, and C down here, but this is not counting down. I didn't get an extra leg down here, so this 1 and 2 and 1 and 2 and here's not there. We just get this 5 wave structure here. So I'm thinking this is some sort of A, B, and C wave for a B wave here, and we'll push up here for this and then come down. So it's a little bit of a different one. An A wave here, an A, B, and C for the B wave, and down for the C wave. And this is where our buying will be on late Thursday here. Thursday here in Australia has got a habit of opening higher and then trading lower for the day. So this can gap up here and then trade lower. So I've also got this wave 1 here as well. So that really is coming from, because this here is, you know, the Australian market is just mining and banking. So the banking side of things here, this is CBA here. So we've got 1, 2, 3, 4, 5 up here, and we've been looking for this ABC for wave 2. Now I could put wave 2 here for this. But this is still a little bit small here, so I just want to give it a bit more time. And then when we look at the banking sector, the XXJ or the XFJ. Do I have the XFJ here? Yeah, here. I haven't got that counted, so I'll go to the XJ. So this here doesn't have that little 1 and 2 situation. It just has a clear 1 and 2 here. So in this case, for the banks, it's pretty much just wave 1 to the upside. We're looking for wave 2 to come back, you know. This is on 45 minutes, all of this, and it's covering that November run. And so, you know, this I'll go with the so the banks and the material sector will be different. So the banks are pretty much like the S&P, and they've got the straight move down here. So I'm just thinking of the banks doing, you know, some sort of rally and then down again, you know. That's kind of what I'm thinking, you know. So that's where that is, really. That's the banks, you know. When we look at, you know, some combos of the top 20 start getting into the bringing some of the miners in here. We've got this ABC situation here, so it sort of throws it out a bit. But I think this will push up and then drop again here. So, and this is the same as the 20. This is the 100 here. So we've got that sort of 3-wave pattern here, you know, and the XJO's got that as well here. But as you slowly go into, you know, the 300 here is the same, and the ETF's the same. So just kind of, you know, yesterday we talked about, well, you know, we figured that it was going to drop, but we could go long above the top here. I think that was what I said anyway. Something like that. But so now we're down here, and I still don't think we need to do anything just yet. I don't have all the answers for this, but you know, I would imagine something like this, you know. So we'll look tomorrow, the Friday, because I think the US will start shoring up late in the afternoon or Friday morning or something, and that's what we want to catch. So we'll just let this develop a little bit further here before we do anything. So that means that here, once again, you know, as far as the crow flies, it makes a nice ABC, and we're getting an impulse wave here. We should be looking to go long, and yeah, you can go long on the open and get up into this, you know, these tops here at the 77650 here. So that's also the lower end of group 2. So yeah, but I think it's a bit of a trap. So I just want to wait out. I'm not going to call a trade in at this point. So yeah, wave 1 for the banks and wave 3 for the miners. So how this plays out here, I'm not sure. I'm just trying to accommodate both of them at this stage. I mean, it looks fantastic and one would buy, and yes, it will go higher. Is it the start of the next run? I just don't know at this point. I don't think so. So we just need to be, I just want to see how it plays out across the top here. So I'm just going to chill on this. I'm not going to call a trade in. But yeah, I mean, it's tempting. But I'm just not going to go there just yet. I mean, the Australian market could do its own thing, and so can the FTSE, and the FTSE and the Aussie market pretty much do the same thing and work together as well, and they've got the same sort of thing going on. But I think I'd just like to wait. Just wait, I think. But yeah, so I don't have all the answers just yet for this. But if it does push up here and it looks really bullish, it doesn't matter, because, you know, I mean, it's got a long way to go, because if you think about it for a second, if we go back to the banking sector here, because that's driving this market. So, you know, if we have 1, 2, 3, 4, 5 here, it's such a small little correction so far, isn't it? It just doesn't make sort of sense. But if it is going to push up here further, then it's starting the whole next leg to the upside. You know, I mean, you see that on the banks, you know, on CBA here. I mean, it's had okay, it's got that pattern there, okay. But still, all of this here being wave 1 and coming back for wave 2, you can understand that we do have a long way to go up here, right? So, like, we're just splitting hairs here a little bit. I mean, the first thing we could do here is that you can go long across the top here. Okay, so that's something. So in the meantime, we just wait. It'll try to fill that gap, and then have a rest and drop if it goes that far up. But yeah, I just want to wait and see what we get here. But yeah, anyway, you can go along above that top there pretty safely. But in the meantime, based on everything else that I'm looking at, we should see some sort of dog leg here. I should have checked the US banks as well, because this will be following the US banks, but they'll be tied into the S&P and back to the NASDAQ and back to those big tech stocks. And yeah, so I think we're okay where we are. Alrighty, enough waffling. Thanks for tuning in. Cheers.